How you guys hear me in YouTube land? I assume that's a yes. The smiley face, space cowboy. Discord, I think you can hear me as well. I'm open. You should not type something in the chat box in there, and I should be able to see it. Hold on here. My own personal fast market this morning. Got a lot going on, and nothing's really happening to the market. So. All right, if you can't hear me in Discord, put it in the chat. I'm assuming you guys can hear me. Awesome. All right, I'll be back in 90 seconds and play the disclaimer, and I will be back.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrency. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites and digital means for educational purposes only should not be services expressing by promise or guarantee achieve profit by loss in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in whole Stops and Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses on material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
This trade room and this webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share trades and potential trades that I take for myself based on my personal analysis. With all the certain trades, I identify specific areas of trading which themselves, but ultimately the decision is yours. Trading is extremely risky, and if you decide to follow my personal trade, you do so at your own risk and can potentially lose your entire account even more. And not always profitable and have routine drawdowns on my trading account. The spreadsheet you have access to is my personal spreadsheet.
NQ stock sell NQ 248 contracts.
As well as prices that are trades, whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm zone prices until you're able to draw zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty, so you heard the NQ stops. See where we're at here. Kind of in between my zones here. We'll go over these here in a second. What I'm seeing, big picture wise. Hold on, where's my drawer at? So you could even make this one big balance. That's not really a balance, but there's a bunch of tails here. I'd make this the balance here over the last few days. Breaking out of that. Not quite in this zone. Kind of in between these two important inflection zones, I call them. It's where prior things happen. Overall, though, this market looks obviously bullish. And it's busted through a lot of these prior balance areas as far as high volume notes. So it's looking like it's going to come up to these over the next day or two. We'll see. I would be watching closely if this does fail in this area. Comes back, gets back below this balance that it just broke out from. Then it would be heads up. That would be a fail break out of that, and then if it gets to all these buying tails, these are very powerful. I'll show you a couple examples in crude that forewarned of the rip that it's been doing. Anyway, if it gets through that, there's really no structure here, down here. So, hold on, somebody just trade room said something. All right, Schroden, I don't know if you're not on the webinar, but if you could do me a favor and not put my name in the tag unless there's some major problem, because it's distracting when I'm on the webinars, on the Bookmap webinars. So it's something that's not pressing. Just ask the room. You don't have to ask me. All right, I'm just trying to get my bearings here. A lot of stuff going on here. Let's see. All right, so this was a event that happened a little while ago on Russell. Back-to-back sell ice here, 147 and then another 88, so that's over threshold. Looks like it definitely got an ATR above here. We'll go over my way I trade these. So this is the spreadsheet that I use. Let me put this in the Bookmap room first. So, I mean in the chat. So this is the document with all my stuff. My new course is out. We'll go over that briefly, and then you can get the spreadsheet and my inflection zone charts. If you can't make it to my room, you get them. You get them as part of my room. But if you can't make it to my room, you can get a separate subscription to these things, and that's this here. $49 a month for the chart. I should charge about $4,900 a month for this spreadsheet because that's how powerful it is. And then the inflection zone charts is the chart charts I'm showing you. I put them up for 17 different futures markets every morning, and gives you incredible trading areas based on prior stuff. Obviously, you guys can draw them yourself, but if you want someone to do it for you, I've been doing it forever, then I'm your guy. So anyway, this is what it looks like, in that room and on that site. You get all these different charts, and I'm going to have it set up for a spreadsheet as well, so you just import it, so you don't have to literally just you don't have to blow up the screen like this and find the actual zones. But that's in the works. I'll have that done shortly. Had a lot going on lately. Second here. We'll go over the course here in a little bit. I don't want to miss this trade in Russell. So anyway, to make that setup, that sell ice setup, a long setup, it needed to touch 82. Last two digits. I'm talking. Looks like it touched exactly. So this is not a. This is the pattern. We talk about it every week. So I have a course coming out. It's supposed to be out today. I'll have it out by this weekend. It's the ATR reversion course. This is exact trade, right? So it's literally playing for, because it's just unbelievable how many times this happens in a day across all futures markets, right? You get a volume event. The market moves an ATR, will come back to the zone. It'll move 2 ATRs, it comes back to the volume event, right? So certain markets have sweet spots, the best ones to be trading, the ones, the 2s, the 3s. So I go over all that in the course. That again will be out, but this is a trade, and this is in the spreadsheet as well. So if you know how to draw your zones, you plug that in. And this is what it. Let's see if I can. That's not it. I was going to show you what the spreadsheet looks like on there, but it's pretty much the same exact thing as this Google Doc spreadsheet. But you come down to this section, and you plug in and it tells you exactly. So for instance, for this one, I would have gone for, if I'm taking the one ATR, I'm in at 76, stops at 05, and I'm out at 56, right? So you would have been literally, you had about 5 ticks of heat, and it came right back to the zone, right? So this is it's a pretty incredible trade. I will of course out on it this weekend. You got to be fast though. This is like it's like your own algo. There's no subjectiveness. There are some disqualifiers. Again, that will be in the course. But you put in your orders, you put in your stop, you put in your limit order when it comes back, and you're out of the trade. So it's actually a very good trade for those of you that struggle sitting in trades and wondering, oh, should I get out? Oh, I don't know what to do here. This thing's running in my favor. What? You just let it come. Whatever's in the spreadsheet, that's what you play, right? So there's many traders in my room taking those trades, and they are all doing very, very well taking them. So I think one guy, his name's Big Al. It was sometime last week. He said, I've taken the last 43, and 40 of them were winners. So I'm not saying that the thing's going to be 98%, but it is ridiculous, right? There are times where you don't want to be trading it. Disqualifiers, and I'll go over all that, but in the course. All right, so currently this was a double whammy in gold. I was supposed to be long here. This was actually, I'm sorry. I gotta get these in first. Gold's secondary to me. Obviously you guys want to see NASDAQ and stuff. All right, so the stop run just fired off. This was when we getting on the webinar. No, I'm sorry, this was the prior one. So this is right in the same area, but let's draw this zone real quick. I'm sure I'm going to miss a trade here. I missed one the other day. It was literally 200 points in about 2 seconds. So this market, you got to be quick on if you're trading it. And as soon as you hear something, you got to be over here getting these zones in so you can catch the trades. It's been giving me the finger lately. I call it a certain name in my room. I'll try to refrain from calling it that today until it does me wrong. All right, so that's your stop run there. You can see it in the sweeps indicator, and you can see it on the on chart as well. I didn't start it up here, right? So the sweeps get first right to the order book. So the sweeps started up here. Actually, I take that back. Let's see. Yeah, actually, I got to move that up here because the sweeps get first right. So you don't know if these stops were actually sitting up at these prices, right? Because the sweeps come in, then the stops come in. So actually, I got to bring that up because I don't know if the sweeps are up here. I just don't want to be a lot of times the sweeps will start at prior prices, and you know the stops weren't at the prices because they were already triggered at these prior prices, right? So I have to draw it. I have to move this zone up to here. And in my new course, I'll show you guys a little snippet of that. I made a video on YouTube and stuff the other day, but I go over all of this stuff, drawing the zones, all my settings, sweeps indicator, sub chart indicator, on chart indicator. The course is almost 5 hours long, so it's definitely an upgrade from my original course, 2020. If you did buy the original course in 2020, send me an email with your email and the medium you bought it on, either Bookmap Marketplace or my site, and I'll give you a coupon for 50% off. So that's if you bought my prior course. All right, this zone is 15,546.75. Maybe already missing a trader as usual in NASDAQ. So you plug that in the zone. That's the top. Bottom is 15,536.75. You guys can hear my tick strike firing off. This thing just, I love it, but I hate it. I need it, but it's like nails on a chalkboard, especially when it's like, for instance, I'm trying to get the zone in. I know I'm missing the trade, and these things are firing off. It's quite annoying sometimes. 23.21, and then we'll go over the market pulse. That's like Bookmap's version of tick strike on steroids. We'll go over that. So anyway, to make this a long setup, you go to your validation price. I need to see 15,570 to make this a potentially long setup. That's how I judge these, and that's from just experience of watching 50 million of them over the last 5 years. So there's your ATR. So that's what that is. So from my experience,
Iceberg sell NG 152 contracts.
From my experience from trading so many of these, I've determined that if I wait for the market to be able to push an ATR out of the area, and that signifies to me that that's a bullish tendency, right, or bearish tendency. So this one got to that price. That's the validation price in the spreadsheet. So now there's different ways I can trade this. If this was an area where I wanted to be aggressive, I can get in right now, or the conservative entry is wait for the retest, wait for the fail back out, or confirm back out. We've renamed it. It's confirm, ATR retest confirm. Then you get in. This is a much more higher probability trade, but you're risking it not coming back, right? So that's what you got to decide as a trader, and depending on your areas, you decide, hey, I want to be aggressive here or I don't. First of all, you see this liquidity, so you know that's going to get filled. I'm hoping it doesn't get filled right now. I want it to come back first, but that's just how it works in these markets. They're completely manipulated. If you understand that and understand we can see what they're doing, right, then you're not so flustered about the manipulation, right? We can see the icebergs, we can see the stop runs, we can see the liquidity, we can see the market pulse. You can see what they're doing, right? So yeah, you can bitch all you want that it's manipulated, because it 100% is, and I know it is because I used to manipulate the market when I was a scalper. I was supposed to have my videos today. I'll have them next week. I just couldn't. I finally got a recorder that works to transfer them, and now I can't. The damn recorder is so old. The software is obsolete for this operating system, so I have a couple other methods, but it's going to take me till next week. So you'll see how I used to manipulate the market, right? So that's what all my trading strategies in my course are based off of, are my my experiences as a large trader. Hold on, guys. my experience as a large trader and how I used to, manipulate the market and how I used to react when I was wrong, so on and so forth. So that's what all this is based off of. It's not hypothetical stuff, right? And of course, it's going right to this zone. Anyway, let's see if I missed a trade here as far as aggressiveness. Not really. That stop run happened in between these zones. We are heading this. This is an important zone that if I get a setup, I will short this. These are the inflection zones that I've been talking about, right? So this was, many things happened over here. The further it goes back, the more things that happen. So if you do subscribe to these zones, know the further it goes back, the more important it is, right? As far as prior things. So this one's gap up. This was a gap up. This was directional conviction down. Directional conviction down. This was high volume node of this balance area as well. Oh, wait, guys, let me turn this down a little bit. Sorry about that. And if it's overbearing, if that guy's overbearing, because this YouTube software picks up my internal, I think it's turned down. But if you can't hear me, let me know in the YouTube chat. What are you guys saying? We'll get to your comments here in a little bit, but if you can't hear me or something, please let me know. All right, anyway, I'm ready and willing to trade this. I'm not afraid that I'm, standing in front of a balance area breakout that's down here more. So it moved quite a bit from there. So I'm not afraid. You want to be careful taking trades. Let's say an Izzy zone was right here. Well, you want to be careful taking Izzy zone trades when it's breaking out of current balance, right? I'll take that trade, but I'll take it conservatively. We'll get into that. But anyway, I have no problem shorting this thing in this zone. So I missed the original long on this, but there was nothing in here for me to be aggressive to get in, right? So like I said a little bit ago, there's two ways I trade these. One, the second it breaks out of an ATR, out of the zone, get in right away, or wait for the retest failure. If it's a very important zone, I'm in right away. This is not a very important area for me where I feel like I have to jump in, so I will wait for that. It is very, very likely to happen. That's why we have the trade, the ATR reversion trade, and that's that, right? So if you were trading this right now, I don't take these on webinars. They're too fast, especially in NASDAQ. I can't keep up with them, but you would be shorting, if you were taking that one, you'd be shorting in 67.75, you're out on 95.50. You're stopping out on 95.50 and you're playing back to the zone. That's it. The 2 ATR, you're in at 88, stop out at 17, you play back to the zone. Same with the 3s. So the 3, then there's different markets that have different sweet spots for how many ATRs that will actually move away from the zone. So I've been saying for 5 years that these markets retest these zones at least 70% of the time, right? Just from my personal observations of watching so many of them. What you don't know is how many ATRs it will go before it comes back and retests the zone, right? So that's what, so many guys in my room or guys and girls in my room, they'll take the 1s and the 2s. There's a way you can get both on, right? Or they'll take the 1s, 2s, and 3s. If you're putting on the 3, you're pretty much stopped out of the 1, but you got the 2 and the 3, and these are better risk-reward trades as well. So again, I don't want to get too much into it because I'm not going to really be taking them on these webinars, but the course will be out this weekend. I'll send an email out. I sent a mass email out for my SI indicator course the other day. If you're not on my email list, just go to my website at Pulcinitrader.com. There's a thing you can put your email in, and then when I release stuff, you'll get it. I don't send out very many emails. They're probably once every 6 to 8 months, probably. So, but when I release that new course, that will be out. I'll send an email out. All right, let's see what's going on here in these other markets. So I really got nothing to do here in NASDAQ until it retests. I forgot about Russell here. I wanted to maybe taking this trade. So Russell did get the ATR below. Now did it get the ATR? Above. Let's see if it got below it. If it did, then this particular setup is just not tradable for me based on my rules. So we know it got up to the validation price of 78 to the exact tick. Did it get down to 26 on the downside? Yes, looks like. So what does that mean? That means according to my rules, right, just once again from watching so many of these things, I cannot take shorts. So if this gets an ATR above, which it did, I cannot take shorts. I can just look for longs. If it gets an ATR below, I can take shorts, I can't take longs. So it's done both. this setup is canceled for me. I will not trade this setup personally. You can do whatever you want. I tell you guys every single week, this is the science. The art is how you trade them. I show you my art. You might want to listen to me because I've seen so many of them, but there's traders in my room. Like for instance, I'm mentoring a trader. I found out he's a physicist, so he's pretty damn smart, right? So he's pretty new to the room. He has my courses, and he's been following along, and he knows how to trade these things, and he came up with his own tendencies of how to trade them, right? So he'll put he doesn't wait for the ATR below it. He'll put his stop outside the ATR on the spreadsheet, but then he waits. The minute he sees a volume event, he waits for a move down, a retest, and then when it makes that new low, that's where he gets in. That's the ultra aggressive entry that I talk about that on my course as well. So the point is, you can do whatever you want with these things. This is the science. I would listen to me until you understand what you're doing, and then you may start seeing your own tendencies, and you say, okay, I like this thing, but I don't feel like I have to. I like what Scott's doing with the zone, so on and so forth. I don't feel like I have to wait for an ATR to put the trade on, right? Because a lot of you guys just hate the risk. The risk doesn't matter, right? So when it matters, but when I put on trades, I care about the volume events and volatility, right? So I'm not imposing my will on the market. How many of you guys have emailed me? Oh yeah, I love putting on NASDAQ trades, but I like to risk 20 points when I put on a trade to make 40. That's arbitrary. The 20 points is what you want to impose on the market, right? The market doesn't care about your 20 points. The market cares about ATR and average true range, the 5-minute average true range, and the zones, the volume events, right? So, sorry, I got distracted there. The natural gas numbers coming out, and actually, if you remember a couple weeks ago, I had a position on. I might have already been stopped out of this. Let's see. I had a long on here. I might have been stopped out, but either way, I'm getting out of this trade. I hope I didn't get stopped out. Things rolling. Hold on. I'll bet you, before I even look, I'll bet you I got stopped out to the tick. Who wants to bet? Let's see. Nope, still in it. All right, so I'm going to get out of this. Numbers coming up right now. We'll go over what I did here, but this is exactly what I'm talking about, guys.
S&P Icebergs sell ES 705 contracts.
All right, I covered that trade because I'm not holding in the number. I did it a couple weeks ago, and I lost like $1,000 on the trade for no reason, just because I forgot the numbers. I think it was on the Bookmap webinar, actually. It had to have been because I do that on Thursdays. All right, we'll go over that in a second, what I was just talking about, what I was saying. This is exactly what I'm talking about. That's why I put my stops in ATR out as a zone outside of an ATR so I don't get stopped out in Algoville, and that's what happened in natural gas. Sorry, I avoided a stop out. All right, so we got some sell ice here in ES. Finally a setup after close to a half hour of open. So I go over all this stuff in my course too. You know, we've had some updates with the drawing of the zones. I used to just incorporate, which was not correct. I've been drawing zones wrong for basically 4 years, and still it's been a profitable situation. So you can imagine, I don't even want to know how many times I've been stopped out because I didn't have the exact accurate zone. But after working with Bruce, and he's been on webinars from my trade room and stuff, and he comes in there and he explains about when this thing spikes and when it flatlines, and where the proper places to draw the zones. Again, I go over all that in my course. It's the advanced section. Actually, I'll just show you this real quick, guys. Let's see here, because I know I'm gonna get questions. So this is what it looks like. It's obviously way more organized than my original course where you just had downloads, right? So all the settings and the thresholds and all the settings for subchart, on-chart, sweeps indicator, and then drawing of the zones. And then, so this was the basic. This is what I used to do, right? I just put it all in there so you can do whatever you want. That's why I have this in. But now we have the updated advanced drawing of the zones, and then you have the actual setups I take. This is what everything I do on these webinars. But you get the actually nitty-gritty of how to do it. And then using the ATR, advanced trading of the zones, and then my gorgeous face right there. So that's the course. The link's in there for it. About 5 hours, so and it's taken me about a year to put together. So I'm sure you guys all know that because you've been asking me for a year when it's coming out. All right, so let's draw the rest of the zone. So that started here. And you can see the black line. I drew over it, but that's the on chart, right? So that helps you. So this was not. Let's see. Obviously, sell ice wasn't coming in. It could have been though. Yeah, I'm going to draw this down to this. So I'm going to incorporate all the prices here. Sometimes this stuff gets tricky. It gets a little subjective.
Crude stocks stopped by CL 338 contracts.
I'm just going to bring this down to this because it was increasing as the market moved lower. You see this buy bubble, that obviously hit some more sell ice there to the upside. Started a flat line there. So you just use your crosshairs and you can see down here. So I'll bring this up to this price here. Again, I go all through this in my course. So there you go. That's the zone I like. This was sell ice. I like to color code them so I know what I'm looking at. I just drew current stops. So we'll head over there. Natural gas number in 1 minute. So, I mean, I could hold it. I mean, that's just, you're just rolling the dice. When new information comes out, the prior volume events, you know, I don't want to say they're worthless, but, you know, it's new information. So I would not, especially natural gas, just like I told you, I got smoked the other day doing that, or last week or the week before. This zone, 45, 34, 50, down to 44, 33, 45, 33, 25. So all you do, again, you guys all have access to this now if you want it, either part of my trade room or go to that website to get a subscription to it. Plug your zone in. 45, 34, 50 is the top of the zone. The bottom of the zone, 45, 33, 25. Oops. Put in your current ATR. I'm using a 5-minute Wilder's ATR. It's just the default and thicker swim. You see it right there in the middle left. Whoops. I didn't want to do that.
Nat gas iceberg by NG, 165 contracts.
4.09.
Nat gas stock sell NG, 462
Right.
contracts.
So that's exactly why I get out of trades before the number. I would have been smushed right there. See this? All right, new information. The zone was looking great. It held. I didn't get stopped out. And then number comes out. Swiperooski. Crushed. That's why you don't want to hold it in numbers. So we'll let that settle down and we'll come back and draw that zone potentially. All right, so this is the zone. Let's take a look where we're at bigger picture. This is my process. Put your zone in the spreadsheet. So this is an Izzy trade. These are the inflection zones. That's also on that website, right? So you can get these zones. This is an important zone. Many things have happened here. Directional conviction, gap, which is directional conviction, directional conviction. Here we are again. Does it mean it's going to do that again? No idea, right? I know it's got a way higher probability of doing that again. So what do? Do I just blindly trade these zones? No, I used to before Bookmap. Now I have Bookmap, and now I wait for volume events in the inflection zones, Izzy zones we call them. Izzy is the trade. This one's a little more sketchy. Remember I talked about taking Izzy trades when on breakout of balances. So this is just breaking out of this balance. So what I'm going to wait to do here, because again, guys, the odds of this trade coming back, it's much more likely to rip than come back because it's just common sense. Traders in here for multiple days, whoever's been short, loading up short longer term, is feeling some major pain right now as the market's moving against them. Very likely to get some stop runs. So does it mean it can't do this and this? Absolutely not. That happens all the time, and those are the best trades out there, the failed breakouts of balance areas. But trying to short up here aggressively is not the right move. Now, if you're watching this the rest of the day, and this does one of these, and gets through this high volume node, which is just the middle zone of a balance area, then it's go time to the downside. I just showed you that on NASDAQ too, so that's what I'd be watching for if that happens. It's if-then scenarios. Right now, that's not happening. This is breaking out. So will I take this Izzy trade? I will take this Izzy trade, but I'm not going to take it aggressively. What does that mean? It means I have two ways of entering the trades that I've already talked about. I either will get in the minute it breaks down out of this volume event. It doesn't really matter because this is not going to be a bearish setup anyway. I think it's already an ATR out of here. But if say this zone is fired off, sell ice, the minute it broke below there, if it was in an Izzy zone, a bigger Izzy zone, I get in aggressively. In certain situations, this situation I would have waited for this. I'm not going to have to worry about that now because it looks like this is already a bullish setup. How do I know that? You go to your spreadsheet, the validation price, which is an ATR out of the zone, 38.50. So if that touches 38.50, which, hey, look at that. Did it touch it to the exact tick? Who knew? I don't think I've ever seen that before. Oh, yeah, we saw it over here in Russell, the exact same thing, right? So this is why we have this trade, guys, that trades back to the zone. Anyway, this is officially a bullish setup. I couldn't take the short even if I wanted to now, even if I wanted to get aggressive there. The short's off the table per my rules. Now, what's in play? One, the reversion trade. If you want to take I'm not taking these on these webinars, like I said. If you got short, you get short at 38 quarter, your stop's at 43, you're out at 35. All you're doing is playing the ridiculous tendency for these markets to come back to the volume events. It's silliness, I'm telling you. Ask anyone in my room. It's ridiculous, right? Does it mean it's always going to happen? No, nothing in trading always happens. And we have certain disqualifiers. I'm not going to get into those right now, but I don't see any per se. I can tell you when you see this type of relative volume, the reversion trades work the absolute best. Right here. See this right here? That's horrific. This is telling you it's Algoville. These algos will whipsaw you to death. Right here. Look at this relative volume right now. So what is this chart? You guys get all access to this too in my actually you'll have access to this in my course too. I'll give you my templates, but you can get them on my room too. I give my templates in my trade room. Anyway, this is telling you that the relative volume is about half of what it's been at this exact time period for the last 30 days, right? That's very important information to know. What does that mean? That means you're very, very, very likely to be whipsawed to death in this type of trade. What does it also mean? You're very, very likely to have good reversion trades because there's no big money pushing this market. Does it mean it can't keep going right here? Absolutely not. But my probabilities, and that's what trading is that this will come back to the volume event instead of just keep rolling away, right? Because there's no big money in here playing. It's just algos that love to sweep or not sweep, whipsaw you. So we'll see. You know, if you get so a lot of guys are taking the ones and the twos. There's a way you can get the one on and the two on, right? So I put the one on at 38 quarter. My stop's at 43. I can get into the two and still not be stopped out of the one. Both of them are just playing back to the zone. These FANG stocks keep firing off, so this may keep going a little bit, but we'll see what happens. But that's the trade. So the tendency, especially with relative volume like this, the tendency is almost always to come back to the volume events. But like I said at the beginning of the webinar, we don't know how far this will go before it comes back, right? And another one could fire off. So either way, this is a bullish setup. If this does retest, fail, I'm in. I see no reason to go long here aggressively, so I'm going to wait for the retest. Does that mean it's going to retest? No. But that's what I demand if I'm going to put on this long. What else? So if I'm putting on, so what trading strategies do I have if it retests? If and when it retests, which I'm pretty sure.
Gas iceberg sell NG 151 contracts.
So we got the blind ATR. It used to be retest fail. We changed it to confirm. It's called BARK, right? So it's basically any setup that you get. You wait for the retest, you wait for the fail. So it's like trading you can literally trade these in a vacuum. That's how powerful these setups are. That's why it's the driver of all my trading, because you get the ATR, the retest, then you get in. Right?
Gas iceberg sell NG 156 contracts.
A lot of activity in that gas. We'll go over that in a little bit. Lost my train of thought. What was I saying? Oh, so the point is, this is the edge, right? This is the what I trade off of. When you can put these events in important areas like the IZZY zones, like Ludwig levels, we haven't even gotten into those yet. Things like that, market profile, composite areas, then you have even a stronger edge. But if you just traded this in a vacuum by itself, which I did for the month of December 2021, I think, for my trade room, just to show them that you could just trade this stuff by itself and not even look at another chart, that's the point. Now just imagine if you have this information at an important area on the chart, that whatever you deem important, right? Like a moving average, the 50-day moving average, 200-day moving average, Bollinger Bands, whatever the hell you guys are, one of the 85 things you have on your chart. Well, if you get a volume event there, it just makes it that much, because this is the information. This is what's happening right now, not lines on a chart from last week or whatever. You know what I'm saying. So you can trade these in a vacuum or use them in important areas. So the BARF is basically trading in a vacuum, but I have one qualifier now that I demand that algo guy. So this is another thing in my room, and actually you'll get the script for this in my ATR course too, because it's one of the disqualifiers that we use certain situations. Of course, I lost the damn chart. Hold on. I had it and then I lost it. What did I do with it? Here it is. So algo guy right now, call it, that's just my name for it, is algo guy. This is an exponential moving average. I put in every week the video that's been done. I'm gonna put it in right now for you guys. This is my trade room. Watch this video, very informative. You know what I'm talking about when I talk about algo guy. It's just these guys. Someone's showing algo guy there. A lot of capable traders in here. Let's see. Oh, by the way, here's my little plug for the day. Where's it at? Mr. Mason. Where is he? There we go. Another Apex, or take the position he was just talking about this trading, what he did, passed another Apex account, and thanked me. There's my plug for the day. Anyway, here is your, right here, I won't put this in the YouTube chat. Watch it, learn it, live it. You can come up with about 50 strategies just from that thing. Oh, and by the way, I'm going to have a course on my trading strategies too. And the great thing too about this medium that I'm using, it's continuing education.
Iceberg sells EC 455 contracts.
So I could continue to put stuff in there and new examples, which I'll do. But so you know, I'm already going to add some new stuff to the course, so it's going to be continuing education, right? So it's not just some static thing. But with these trading strategies, I have about 100 of these in my head, right? I've only put down a few on paper for my trade room. What we're going to add as they you know, come up. So my course is going to be on this stuff is going to be exactly what all these parameters are, and you know, how I trade them and so on and so forth. But as I add new ones, so when you get this course, as I add them, they're, you know, within the next couple of years, there's probably going to be 20 to 30 of these things, right? And you'll get, you don't have to pay extra is what I'm saying. You'll get them as I add them. But these are what I'm trading right now currently, right? And we'll get to them. We have acronyms for them. Most of them are, you know, trying to be funny just to remember them. Dad, bark. It used to be barf, like barf, better. That's a little more funny. There's the Izzy trade, lick, right? Slug. So that's what you'll get with the. That's the other course that's coming out. ATR reversion course is coming out first. Then I'm going to put this one out. All right. So anyway, algo guy is bullish in ES. So I can only take bullish setups, which that setup is already bullish. But I mean, I can only take trades to the long side on the barks and the lick trades. If the blue is above the red. The blue is the short-term exponential moving average. The red is the long-term. As long as the blue is above, I only take longs on the bark and the lick. So that being said, all I'm waiting for now is a retest of the zone, which, as I've talked about, is highly, highly likely. Now I just wait, right? So if this retest, I used to say fail, confirms, then I'm going to go long. And all those prices are in the spreadsheet. So what you want to do as you're waiting, you got to stay on top of this ATR until you get filled. That's what I do anyway, right? Because it changes. Now it's 3.93. So sometimes your entry price, many times it'll change, right? So I was going to go long. If that retest of the zone came back out, I was going to go long at 39.25. Now it's down to 3.93. You see, now it's 39, right? So keep up to date with this. Until you get filled. So, and then that's this. This is what I was going to show you, man. This is it right here. So when you get this on the, again, this is Pulcinitrader.org, right? Oops, that's the admin side. Then you just go in here and you get your product. There's your spreadsheet. The top is the position trading. I have a little video for this too, if you guys end up getting this stuff. And then you have the ATR here, and then you can open up another one. And you can have all these different tabs for all your spreadsheets, right? There you go. So finally got that done too. I'm a mover and a shaker lately. Got the course done, got the website done, gonna have these new courses done, and then I'm gonna take a big time needed mental break. Hey, wait, what is this market? Is this market heading back to this volume event? That's a rare occurrence. Being sarcastic. Let's see if you guys got any questions. I need to watch this video again. I need to learn from professionals. I blown 20K pissing in the wind. Got to learn a strategy like this. Repeat. Right. Well, many people can learn the strategy is it's then getting out of your own way, which a lot of traders can't do, and that's why 95% of traders don't make it, right? One of the reasons. But you can do the Apex Trader funding. That's on that thing too. Might as well give them a quick plug since I'm on here, right? This is on here as well. Down here, click on that link. Use this code for any sale they have going on. I don't care if it's 90% off. This code will work, right? That brings you to this. If you guys are practicing, working on your trades, you come in my room, you don't want, first of all, you don't want to be risking your own money if you're learning something new, right? Get one of these things. You can practice. Yeah, I know a lot of people are like, oh, I can't trade if it's a sim account. I don't make the same decision. Well, yeah, you're risking, the amount of that it doesn't cost that much, right? So right now it's like 100, half of that, the 50% off or whatever they have going on right now, the 60% off. So that's your skin in the game. So you're still not going to want to lose because it's the same thing as, do you open up your window and throw money out your window or your wallet out the window? No. So you're going to care if you put on trades and they lose, because if you blow out the account, then you got to re-up, right? So, and if you do well, then you're funded, and this is the only thing I don't like about it. It's not a $150,000 account. It's a $5,000 account. So if you get funded for these things, and I just showed you the guy in the room, he just funded another one. He said there's multiple. You get funded, you're ready to go. The most you can lose is $5,000, right? So it's not that. When I see 150,000, I think I can lose 150,000. No, it's 5,000. So that's the one thing you got to know about that. And then when you're doing the tryouts, it's a trailing 5,000 too. So I've had many accounts. I've been doing them because I'm doing it for all these strategies as well. But I wanted to do them for my followers to show that these guys were legit. This was a couple of years ago. I did it, qualified, got funded. So the point is, I've been funded on a few of these, right? But the point is, as you're doing the qualifier, as you make money, so say you go up $8,000, well, the profit goal right there is $9,000. So you're real close, and then you have a drawdown, which everyone has drawdowns, and if you lose back $5,000, you'd still be up $3,000, but you just blew out of the account. So that's one downfall. It's not a downfall. It actually teaches you risk management. When you go live, it only draws down. So if you go up $5,000 once you're live, right? Then it'll pull back to the regular. If you lose $5,000, you're still out of it. But as you make money, so say you go up 10, well, now it's not, you lose 5 and you're out. Now you got to lose the 10 and you're out. And if you go 20, you still got to lose the 20, then you lose the account. You see what I'm saying? And they pay you 100% on the first $25,000 you make, which is unheard of in this industry. These things are popping up all over the place. There's a reason I put my name behind these guys. I've tried the other ones when I was struggling, getting back in the game, 2013. I tried one in particular. I'm not going to name the name. Complete joke. They just wanted to take your cash for the tryout. You do it. I would qualify. Oh, now you got to do the live account. I'm like, well, I thought this wasn't live. So then you do that one. Oh, now you got to do the secret squirrel tryout. It's like, okay, whatever. You guys are full of shit. So pardon my language. Anyway, this is the best one I've seen. You can do whatever ones you want. Just like trading the zones, you can trade them however you want. Hey, whoa, look at that! Holy cow! I can't believe that thing returned right to that zone. Wow, would that be the ATR reversion trade? I think it would. Let's see. Short at 38, stop at 42.75. I don't know if you got the 2 on, but the 1 worked. 2 was 41.50 now. There's your 1 ATR, guys. It's just ridiculous how often this stuff happens. It's silliness. It really is. The problem with me putting out the course is everyone's going to be doing it, and just like anything in trading, it works until it doesn't work. So just know that. And I'm the first to know that because I used to make millions of dollars scalping, and then it disappeared and I couldn't make $1. So run with this trade as long as it works. I know you guys are saying, well, why would you give that information to the public? My trade room has had it. This trade was born out of a trading in the zone, and I'll go over this in the course too. I'm not going to get into this right now, but I was trying to give an example of you can come up with anything that's an edge, and if you follow the rules, you can make money on it, right? That's straight out of trading in the zone. I'll show you briefly here in a little bit. So I wanted to show them. So we built the trade in the trading room. I'm like, okay, here's the parameters. A guy, Jorge Labrada in my trade room. He's my moderator. He's 100% responsible for help building this out for the ATR. I'll get back to that. Let me put this trade on first. So I'm going long, barf and lick. I'll get back to the ATR stuff in a second. 3.98. Make sure this is right. Whoops. So I'm going long still at 39. This is the great thing about the spreadsheet. You put in your risk. The percentage you want to risk, I'm more aggressive with these Apex accounts. I got 10% risk. You don't want to be doing that if it's, you know, your real cash. 2% is the most, or 4% if it's an A+ trade. We'll get into that a little bit later. I could put on 10. So this is the beauty of this thing. You just plug it in. So I said it's worth $6 million and not whatever the cost is. 39, I put on 10. I'm going long, and I'm going long bark and lick. You see the liquidity up here too, right? There's a band here, which is pretty close, but there's another band there. So I will put this trade on. Let me get this set up. Hold on here. All right, I'm still long. I was long wheat before the webinar. We'll go over that. That's moving nicely. I gotta actually look at where I'm gonna get out of some of those. We'll go over that trade here in a second. So if this comes up to 39, I'm long. That's the wrong account, which I do all the time. Eventually I'm going to get an assistant in here so I stop making stupid mistakes. So that's number 69, and then the lick is number 66. 39. So those are working. So I wait, right? I'm not, this is another example. You may say, you know what, hey, I love the ATR idea, but I get in right when it gets back into the zone. I'll put my stop right there. Fine, do whatever you want. That's the art. From watching 4.2 million of these, the best way, conservative entry is a much more secure entry because this could just go right through this right now. So if I just have noticed, again, from watching so many, it comes back, much higher percentage of it really ripping if it can come back and get outside the ATR now, and that's where my entry is. It's just outside the ATR. You can get in right here if you want. Risk here, risk an ATR below, do whatever you want. I do that for a reason. Not just because I like waiting for ATRs and risking more points. It's because I got sick of putting in trades at the zone and getting whipsawed out of the trade, right? So if this gets back out of here, it's a much higher probability, that's what trading is, that it's going to run, right? All right, so that's working. Let me check on my wheat trade because I need to get out of some of these. This thing's rolling nicely. So this was, Madam Shizzle actually put this in the room, or she put the first one in the room. So this was earlier. These are just perfect, guys. This is what I got. This is what I got long off of. This is, actually, she did put this in the room. So this is the great thing about my room too. Right? Another plug for my room. You got capable traders in here. This is what I want this room to be. People pointing out when they're set up so nobody misses anything. Here she is. Give her a plug. She's one of my favorites in the room, and she participates all the time. That makes you my favorite as well. What did she put? Right here. ZW stops again. So I wasn't even watching. I heard it, but I was doing stuff, setting up my charts and stuff, and I said, oh, wait, let me go check that out. Drew the zone. This wasn't a double whammy. This was just a stop run. What are stop runs? They're usually just traders puking. Are they initiative positions? Mostly not. It's usually a retail trader puke. Then I waited for that. Actually, I didn't wait for that. This was a Izzy trade. But you got the BARF as well, or the BARC, ATR retest failure. I don't know if I've mentioned this routine, this where it goes to the ATR and comes back to the zone. Anyway, did that. I got long. A new event came in, so I was already long from down here. And then this came in, and I trailed my stop to this. Just so this. Look at that.
151 contracts.
I told you guys that there's a camera in my office, and they know exactly what I'm doing. So the minute I start talking about wheat, then stuff fires off. Anyway, I'm kidding on that. Volume event, my stop was below this event. I brought it up to this event, and this is why I wait for it. I demand an ATR outside of more than an ATR outside of the zone. I avoided the stop out. I'm still on this long. Now you got a new event. Let me just see where we're at on the lugs. So that's, I obviously not filled on. I'm just seeing what I'm doing here. Yeah, so that's that trade, right? That's a nice profit when I'm only risking $500. That's already a 2-hour profit. So let's just see where I could be getting out of these. I'm sure this is something here. So this is pretty close to the top of this prior market profile composite. We'll go over these areas that I get out of, because getting in is pretty automatic. Getting out is more subjective. But the position trading, the reversion trades are, you just follow the prices, right? 0875. This is pretty close. I don't need to sit here and, because I'm on these webinars, I'm going to get out of one right here so I don't miss the bounce off the top of that market profile composite. So I'm out of one. And there was a new event too. So now this is how I trail my stops. based on something that happened in the market, not on because I don't want to give back my profit, right? 163, that's threshold. Threshold is 150. So you see that come in on the on chart here as well, and the spike on this thing. So it started here, a little bit there, then it kept coming in as the market moved higher. So this is my zone. Right there. See the camera in my office. They're like, oh, you're gonna get out of one? Okay, we're gonna rip it then. I told you. Somebody's always watching me. It's a joke, right? Because you know how many traders say the same thing, like, "Oh my God, they stopped me out to the exact tick." Somebody they know where my orders are, because that's what it feels like, right? Obviously, that's not the case, but that's what it feels like. Because I'm just like you, right? I have a lot of experience, but I have the same thoughts and get pissed off and go on tilt, just like you guys. I can control it a little better now after doing it for 20 years. But it should be refreshing that I say the same stuff as you guys, because that's how it feels. It literally feels like it's personal and somebody's against you. 607.50 down to 606.
Gold stocks LGC, 206 contracts.
All right, gold. Did I forgot what I did. I didn't do anything in gold. All right, put in the current ATR. That is 2.51. So now
Gas iceberg sell NG, 187 contracts.
I completely missed out. There's a ton of nat gas stuff. This is why I'm one guy. I can't get in all these markets on these webinars, but I don't even want to look at that. I'm sure I missed some whoppers in nat gas. Anyway, so if I go along off of that, off of this new setup, my new stop is 603. So this is where I'm going to trail my original long to 603. What's 603? That is, I'm demanding or forcing this market to get an ATR plus 10% outside, or 15% outside of the zone to stop me out. And that's how I avoided the first stop out, because I put it outside of the volume event. An ATR plus 15%. That's all in the spreadsheet, but that's why I didn't get stopped out here. I still would have made a little bit on it, but that new event came in, and my stop was basically right here. Actually, it's in the spreadsheet, I think. Let's see how close I came to the stop out. Oh no, I already changed it, sorry. Anyway, I didn't get stopped out because I put in an ATR plus 15%, because that's how I help myself from not being algoed. That's what they do. They take all your money with this game because they know nothing's going on. Don't get algoed. Force the market to push through the volume event and an ATR outside of an ATR. Then you say uncle, right? So now I'm doing the same thing with this zone. And that's all in the spreadsheet right there. Stopping at 603. I still have one on. Other than that, I'll let this thing ride until a lug, the powerful lugs. I'm not going to, my rule is, if I only have one piece on, this is why I wanted to get out of one here, right, in case I wasn't on the screen. This is market profile composite high and its extreme standard deviation. Grains are the king of the pop off the extreme standard deviation of VWAP and come back and revert to the mean, right? So this one's still rolling. I usually would get out at if I had more on, I only have one left, I would get out of another one at yellow lug, but I'm trying to hold this to the red lug and or an opposing volume event, right? Which I have right now. So if this comes back to 603, then I'm out. Other than that, I'm letting that puppy ride, hopefully to the red lug. And there's a way I can add to this trade. Granted it was an IZZY trade, but I was telling my room the other day, you can have a hybrid where you add on new events to your original trade, even though it's not an IZZY anymore. This turns to be a bullish event. I can put on the bark, obviously, the lick, obviously, and I can add to my IZZY trade. So you see, when you catch a trending day, you can have multiple positions on it. You're just trailing to your most recent event. All right, a lot of talking. Let me. All right, so that is my stop for that is working. Let's see what happened with the yes. So do you see why I don't just pop in the trade when it gets back to the zone? I would have been stopped out. Now I may not put this long on if it comes back. If this got an ATR below here, then the long is disqualified per my rules. I don't know if I've mentioned this spreadsheet on this webinar, but here it is. Let's see what the invalidation price, this is the same as the validation price on this side, 29.25. So if this gets down to 29.25, I cannot put that long on that I had working. It did not yet, so this is still okay for longs. If it gets down to 29.25, I cancel my long. I can't put a short on either. Why? Because I already got the ATR above there. So then this event would be disqualified for me. For me. That's how I trade. You want to trade it any way you want? Be my guest. Alright, so you guys got some questions. I'm trying to avoid looking at natural gas because I know I missed. Then that thing starts rolling. Holy cow. Oh, the arrow is the retest of it. Wow, is it? I can't believe. Did this retest this volume event here? Huh. Oh, surprise, surprise. That is a real shocker. Did it bounce right off there? So here's another event, by the way. I'll come back to gold. Gold gives me a headache sometimes. So I want to first complain about some of the trades that I potentially missed. You guys, so I complain all the time. I'm a human being, but that's how I get it out. So I talk to my trade room all the time about suppressing your emotions, right? There's nothing wrong. Ask any trading psychologist about, releasing your feelings, right? So my complaining and talking and complaining and talking, that's me getting it out, right? You do not want to suppress your emotions. You do not want to act like losing trades don't bother you. If they don't bother you, then fine, right? And I'm moving this up because it spiked up a little higher, so that's why I went a little bit higher than this line. But don't pretend like it's not bothering you. If it bothers you, get it out of the way, and move on, right? Most traders can't get it, they can't, get rid of it. That's how I used to be too. I used to break stuff and it would bother me for hours, if not days. I talk it out to get it out. So get it out and then move on. That's the key. But don't suppress your feelings, because you're going to suppress so many feelings, especially in trading. How many emotions do you have in a trading day, right? You suppress all that, you're gonna end up going on a shooting spree or something. I'm not making light of shooting sprees, but I'm trying to make a point. Like, you're gonna literally lose your mind. Get it out, move on. So that's me when you hear me talking and complaining and I got stopped at the tick. That's just me getting it out of my system, and then I move on. It takes a long time to condition yourself to do that. Don't get me wrong. That's my advice for that. Trust me, I'm the furthest thing from a trading psychologist as you can get, but I do control myself and I catch myself. That's the key. You ask my trade room, I say it all the time. Guys, I feel like I'm going on tilt. I know I'm going on tilt here, so I catch myself now, so I don't hurt my accounts.
382 contracts.
All right, more. Let me put this in real quick in crude, see what I missed here, because it looks like it's retesting the zone. I know that's a complete shocker. 83.04 to 82.99 is your zone. 83.02. Whoever thought you guys would be getting trading psychology advice from me? That's a little scary, actually. All right, there you go. And when you see my videos next week, you'll see exactly what I'm talking about. And that's when I was not a calm, mature young man. I was a punk, emotional punk. Anyway, here we go. To make that long setup, it needed to touch 83.18, which I believe it did. Right there. Well, I can't believe, guys, this is like a unicorn. Did this market move one ATR and then back to the zone? Wow, that is a real surprise. This is what, like the fourth or fifth one we've seen. Now you know why we take that trade. That's why I'm coming out with the course for you guys. All right, so we'll come back to this. If it retests, if it moves back out of there, as long as it doesn't get the ATR below, I can take a long there. I do have a trade on, and we just got another event. So now what do? So you can see, guys, when you have multiple events on a trending day, you can just kill it, because you're just putting on new trades off of the new event, and then you trail your stop. This one I didn't add to it, but you'd see my point. And what I know I say that 100 times a day because I just reference my trade room, because I'm in there nonstop, right? I do this twice a day in the trade room, exactly what you're seeing here. But what I tell them is, and what is 100% the truth, trading for a living looks like this. Make a little, lose a little, make a little, lose a little, make a little, lose a little. Huge day. Make a little, lose a little, make a little. You never have the huge drawdown because you cut yourself off. You're supposed to, right? You all heard my story, how I didn't do that early on. When I was the young punk, I'd have $1.6 million more in my bank account, $1.4 million in my bank account, if I just could stop myself. So, point is, you just have to know when you're trading. So many traders come in the business. Oh yeah, if I can just make $500 a day, I'm good. And they you can make $500 a day average, You're not going to make $500 every day. It's not going to happen ever, 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 ever. Could you average $500? Absolutely. Could you imagine average $1,000? Absolutely. But your days are going to look like this most of the time. 80% of the time, that's what you're going to look like. And then you're going to have the huge day. So this would constitute, like, if I was just trading wheat, this would be a huge day, right? This is a very nice trade. So now I plug this zone in. I'm sorry, this was before the webinar, right? And it was already rolling away by the time the webinar starts. So don't think I'm just throwing that in like after the fact. 613 to 610.75. But Madam Shizzle did point out the volume event, so my room better have caught this trade, or there's going to be some verbal lashings in the afternoon webinar, I can tell you that. And
Levi's iceberg size EW, 151 contracts.
Wow, this thing's just rolling, man. There's another event. Now I can trail to this. Madam Shizzle, you better have this trade on if you're on this webinar, or else you're really going to get the paddling, the verbal paddling. So this is the new event. Guys, and I know what some of you are saying. Well, I don't want to see wheat. What the hell is this, man? I want to see my crappy ES that's just sitting on a 3-tick range. It's all the same stuff. So if you learn what I'm doing in wheat, in natural gas, in crude, doesn't matter. It's all the same in these futures markets. It's the volume events. That's the edge. So don't get mad because you're watching me trade wheat and draw zones in wheat. Learn from it. All right, so this I'm going to put this in. I got to stop talking for a second. My head is about to blow off. 615 to 614. Now I trail my stop to that. That's why I love when Bruce hosts these things, because I can actually breathe as he gives me the questions. 2.71. So remember I was at 603 for my stop, trailing stop. Now I'm at 611. So this new event, but actually I don't want to stop it on the prior volume event. So you see what I'm saying? So what am I doing here? Well, I'm trailing my stop to this new event. Whoops. New event. I'm supposed to stop at 611. Well, that's right back in this volume event, so I'm going to get just outside there. I'll put it at 610. Still a whopper trade for the size I'm trading on that, right? 610. All right, now I'm officially taking a break. And I think ES just violated that zone. So once again, do you guys see why I demand the retest confirm versus getting in at the zone? It's not there yet. What do we need? 29 quarter. So you notice I avoided I didn't get long. I didn't put a loser on. Not putting a loser on is the same as putting a win on. 4.02. So this market needs to touch 29.25 to invalidate that long. I think I just touched it right now. Right there. 29.25. Long is disqualified. I can't take a short off this either because it got the ATR above. Per my rules, this trade's dead. That event is dead. Big deal. There's another 8,000 right around the corner. This thing might go straight to the red lug. We haven't even talked about the lugs yet. I want to show you guys some examples too. I'm coming up with a thesis for the lug. This is baby lug. So I really want to get out. If I had more on, I would definitely be getting out of one here. Why? First of all, this is extreme standard deviation of VWAP, right? But why is this hugging VWAP right now? Like, why? Remember I said grains are the king of snapping back? Well, because the big money's playing. Remember we talked about not the big money playing in these equity markets? Let's get this out of the way. That's right here. See this volume coming in? It's 3.5. It's almost. Probably 4 times, 3.5 times normal, right? That's why it's hugging standard deviation. When the big money plays, they run over the standard deviation algos. And then you get this self-perpetuating cycle where it's like the algos fade it, they get run over, they puke it. They fade it, they get run over, they puke it. And that leads to that because the big money's running them over. Anyway, if I had multiple on, I couldn't because of my risk factor, but baby lug confluent with basically the point of control and the bottom of this guy, I would definitely be going to have another one here. But my rules are, I trail by stop, this comes back, I'm out at 610, and I'm below the yellow lug, I'm fine with it, great trade. If not, see if we can get up to the red lug. So the lugs, let me just take a break for a second, see if you guys got any questions. I gotta take a breath. Let's see. Well, lots of participation today. So I went over the Apex, trading micro, yes, really cheap. Yes, there's nothing wrong with trading micros, guys. Just especially, like, I wish, there are micros for the grains, but it's very thin and you get bad slippage, meaning you get filled at worse prices, like at stops and stuff. But you can trade. So if they had a micro product, like a real micro product, like the ES, I could add 20 on instead of 2 big ones, and I could be getting out of some, like right here, like right what it's doing. I had a feeling that's what was going to happen. I would have got out of some here. Anyway, nothing wrong with micros. Trade 10 micros instead of 1. When you trade one E-mini contract, it's all or nothing. If you have 10 on, you can get out of some here, some there. Problem with trading is it sells off very quickly. You need to enter a stop before you place a trade. Risk management, always risk management. I've seen some webinar around where you're speaking at annual return with your strategies. Very interesting. How are evolving stats right now? May I ask? Thanks for sharing knowledge. So my stats, I'm trying to get these. So I used to trade. First of all, I used to trade my live accounts on these webinars, right? And one, none of this existed. They existed in my head. So I was doing the web. You go back and watch them. I've been doing webinars for Bookmap for 5 years. You can go back and watch them. I would be trading off of my live accounts, all this stuff, like just randomness, right? So I'd say, oh, here's an inflection zone. Yeah, I'm going to go short here. Oh, here's a trade where I like ATR retest failure. Like, these were not centralized, right? So these are, so lots changed. One, when I'm on these webinars, because I am one person, I make so many mistakes. Like, ask, once again, come on my trade room and you're going to see them. Because I'm one person. I'm eventually going to hire someone to help me manage my trades and stuff. But that's like, I'll put a trade. First of all, I'll go to put a trade on, and it'll be the wrong account. Like I did this yesterday. I put in a wrong NASDAQ account 2 days ago. I went to put on the BARF trade, and I actually put on like one of these. And I'm like, oh, crap, I put on the wrong. So I got out of the trade. I went to go put on the BARF, and it ran away, and it was a 200-point winner, and I didn't have the trade on. So that I'm okay with that. I mean, I'm not okay with it, but that doesn't cost me money. What was happening is I would be putting in, like, I put on a trade, and then I cancel it, and then I leave the stop in, and then the thing rips through me. I find out I lose $1,000 on a stop. The other day, soybeans. My phone was downstairs. I had a soybeans long on. I forgot to get out at the close. The market opens up. It gaps down 17 cents. A $1,200 loser. So I got sick of losing my money that I'm living on to support myself because I am making mistakes on these webinars, right? So what I said I'm going to do is I'm going to do each one of these Apex. I'm going to assign an Apex account for each one of these strategies, and we will keep the stats. So the problem right now is it's the same as when I was trading real money. There's been so many mistakes with these strategies that, yeah, the stats, I can update the stats. I updated them for a while, and that's what this is here. It's just they're not accurate, right? So I don't want people coming in the room and be like, that's what this is here. So you go here. Oh, I need a break. So you go like the, where's Slug? Slug's the best one. I like showing that one because it's always the winner. But so I would have these stats, right? Well, they're not accurate. One, it's very hard for me to keep up with this because I go in there at the close every day. This is why I need to hire somebody. But the point is, there's been so many mistakes with these that I don't want someone coming in here and looking at the slug being like, wow, this is great. Oh yeah, I want to take this trade. That's the first thing, right? Because of the mistakes. The second thing is, this is still subjective, guys. Like, I am getting in at these spreadsheet levels, but you may take the exact same trade as me, right? But you may, so for instance, the sweet trade, you may take the same exact trade as me, and of course that bounced right off that level, I thought, right? Say you took the Madam Shields will give you the heads up. You took the was this a slug I missed too? That was a damn slug. You got to be kidding me. That makes me sad. So this is a perfect example. I missed this. This was the slug. This is the best trade out there. The stop run into a lug way down here. See this right here? Yeah, that was a slug. Madam Shizzle did not point that out, so she's getting a verbal lashing because it's her fault I missed the trade. Anyway, my point is, if you're following the spreadsheet, yeah, everything tells you what to do here, right? As far as entry and exit for a stop, not exit for when the market's moving in your favor, right? So yeah, if I put on this trade right now, I would say I'm getting short off this because the thing just failed in the most recent event. Say I'm getting short off of this. It tells me where to short, tells me where to stop out. Yeah, that's great. But the market starts moving in my favor. That's where the stats get disoriented. right? Because where I'm getting out is not going to be the same as where you're getting out. You may think you're going to get out at my same levels, and I say exactly where I'm getting out. It's all in here, trading in the zone document, part of my room, right here. I pay myself as the market makes money available to me. So these are the areas that I will piece out of some of my trading, as you've seen on my webinars, right? The point is, you may not like that area. You may say, oh, I'm gonna, you know what, this trade, I think this one's gonna make it all the way this long that you're in. I'm not getting out at baby lug confluent with point of control of market profile composite. I'm gonna wait for the lug, and it comes back and stops you out. And I got out up here, something like that. You see why they're not accurate anyway. So the best thing I can tell you is come in my room, learn these strategies. Guys, here's a perfect. This was the best quote. This is my my guy who does the spreadsheet and everything. He came in. Someone was questioning about following your keeping track of your losing trades. So I used to do that too. I used to spend a lot of time on my losing trades. And when I trained for trading stocks with SMB before, I was not going to trade futures. When I got back into the business 2017, because I was so jaded from being a millionaire to going to zero, I hated ES. I didn't want to even look at the damn thing. So I was going to trade stocks. They don't even let their traders look at their losing trades. They just want to know what were your tendencies of your winning trades. And that's how you build your edge, right? That's how you build your trade plan or your trade strategy. Yes, I still will look and be like, oh, why did I lose on that trade? But don't spend a lot of your energy, because a lot of times you're not going to know. Markets are random a lot of times. They're algo-ridden. You're not going to know why you lost on a trade. Stop wasting your time. Focus on why your trades were winners, right? But anyway, this is what Jay Labrada put in here. So this guy, Schrodin's a very good active guy in the room. I don't know if you guys have picked that up. If you come to my room, please participate. That's how you're going to learn, and it helps the room and it helps everybody. Anyway, he was saying about, looking at, I'm not going to go up to the exact quote. It was about he thinks you should focus more on the losing trades as well. Not more, but as much as you focus on the winning trades. Jay Labrada said, I would normally say you're right, but that would be what trades you have embedded and are still testing. Right here. This is the key sentence of this paragraph. The strategies in this room are tried and tested, so the losses are just part of the random distribution. So guys, looking at my trade stats is not going to do it for you. Get in here, learn what you're doing, get my course, learn what the hell you're doing. Then pull up Bookmap, replay the days. I think I just stopped out of that week. Yeah, I stopped out of the last piece. Replay the day, draw the zones, put the trades on yourself, or do it live and come up with your own damn stats. And that's what this is for, right? Because it's never going to be accurate. I can tell you that each one of these will be eventually live, and each one of these is an extreme edge in the marketplace. I can tell you that for a fact, 100%. If they weren't, I wouldn't have a trade room. I wouldn't be doing webinars. I wouldn't be doing this for a living, right? So the point is, these are the edge, right? Figure it out for yourself. Like, I can only lead you guys. What's the saying? You can lead a horse to water, you can't make him drink. I can show you guys so much. You still got to do it for yourself. And then you want this. This is all in this spreadsheet, or the sheet I shared with you guys earlier. These are all discounts to this stuff. You absolutely need to be doing one of these. TraderSync. Click on it. Sign up through that banner. You get 7 free days, and then you get a discount with my link. You got to keep track of your trades, right? This is more of a do as I say, not as I do, because I'm very bad with it, because I don't know if I mentioned how busy I am. I will eventually hire somebody. This is one of the reasons I don't even put the stats in. But even if I did put the stats in, even if you came in the room and like, wow, that slug trade is 80%. I love that. I'm going to just do that trade. Does that mean you're getting out in the same places? Absolutely not. Figure this stuff out for yourself, guys. As far as which strategy you want to trade, keep your own damn stats. That's what I got to say about that. All right? Wow, a lot of rants today. If you enter a sell step and the market sells off for you, buyer is filling, you will be short as the market sells off. Where would you be entering a sell stop before the market sells off? I don't know what you're referring to, John. I don't know if you might not be talking to me. Well, Scott, you put on a lot of trades. What broker do you suggest for reducing commissions? I would use, you got to decide what you want, right? Do you want a broker that's, that you call in the trades and they're there, customer service and all that crap? If you're not, hell bent on customer service, because even when you call this place, I'm not bad mouthing them because I have accounts with them. You're not going to get, like, a lot of times you don't get responses right away, right? So, they'll pick up the phone and you call the trade desk. So, the best one for commissions is AMP, right? AMP futures, right there. So that's what I have a couple accounts at. So I would use, if you're looking to save commissions, if you want more of a personal, I don't know why you would want, why do you need to talk to a broker? This isn't 1987 where you call in your orders, right? If you have a problem, you want to be able to get a hold of somebody. That's sometimes an issue. I had an issue with them a while back. Again, I don't want to badmouth them because I still use them. But stuff went down. I couldn't get a hold of anyone for like 7 hours. I had no idea if my positions were on, whatever. So, but I'm recommending him. So not, you know, it was a one-time occurrence. It was like 3-4 years ago. That's what I recommend to save money on your broker. Expectancy is based on experience. That's why stats are not good. I get it. Well, it's experience and where you're getting out, right? This is golden for where you get in. It tells you everything, and where you get out to stop out. But when the trade's moving for you, where are you getting out? That's what I'm trying to get at. TD Ameritrade always trades quickly. If you're trading TD, if you're trading futures on TD Ameritrade, you got some. That's not a wise move. The last time I checked, where they charge you about $7 a round turn. Like what, guys? Why are you paying that kind of commission if you don't need to, right? So I have no affiliation with AMP whatsoever. I'm just telling you what I use. That's the cheapest one that I've seen. There's other ones out there. Just Google discount. It's real easy. They have this thing called Google now. I don't know if you guys have seen it. Discount futures broker. Look at it, even populated by itself. There you go. I wouldn't think this one would be one. Maybe they may have changed the rates. Discount trading, right? Just want to make sure. I mean, AMP's not even up here. You'd think the A, they would get their, but that's what I use. So otherwise, go to these. Check these out. That's all I gotta say about that. TD Ameritrade answers quickly, but again, why are you paying? I don't know what it is exactly, but I know it's not as cheap as AMP and stuff like that. So you guys do whatever you want to do. Like I tell you that in everything I'm doing. Do whatever you want to do. You can take my advice, or you can chuck it. You can think I'm an idiot, do your own thing. Fine. I'm giving you, and I'm an idiot sometimes, right? I make mistakes like everybody else. I'm giving you. The whole point of the webinars, the whole point of my trade room is to give you my experience, so you don't have to go through 25 years of ups and downs and kind of learn from my downs, so you don't have to do that. I say it every day when I get in there. I'm like, here's another mistake, guys, I made you can learn from, so you don't have to do on your own, right? So learn from me from that aspect. But if you don't want to listen to me, that's fine. You do you. All right, we got about 10 minutes. Do I pull over? Oh, so first of all, I got stopped out. We trade, and it's fine. Remember, I said I would be getting out of more in that area. And what did I do? I trailed my stop to this guy. Remember, I was at 611 and I moved it to 610. Got stopped out. That was a great trade. What was that, a 20+ point trade? I did miss an account. I missed a strategy, the slug. And this was perfect.
By 80, 157 contracts.
I'm not going to trade hogs right now. This leads me into the Ludwig levels, right? The second most powerful thing I've ever seen in my futures trading. They went down like 2 days ago for like 20 minutes. She needed to refresh the server or something. She's in my room too, so you get direct access to her. Don't drill her with questions all the time, but she's in there. She says when the lugs are rolling to the next month, so on and so forth. She's awesome. These are awesome, right? Second strongest thing I've ever seen. So the point is, I have a strategy for these exact things. So you can use these lugs in so many different ways. We call them lugs, so I don't have to say Ludwig levels 85 times a day. And she's accepted the name lug. She loves it. So we helped. It was somebody in my trade room named them, so it's stuck. It's stuck like glue. They're called lugs, Ludwig levels. So again, that's on here. You guys all have access to this. It's in the YouTube channel. I posted this. Ludwig levels. Go to her website. Do the 3-day trial. She has on there. If you want to try them out. Once you go back, or once you use them, you'll never go back. I think. Put that in. Say you saw it on the Bookmap webinar. You get special pricing. Right. That's that. So. How do I use lugs? I use lugs for obvious support and resistance. The blues and the red, she calls them big blue, big red. And those are the most important ones as far as support and resistance. Yellow is more like a VWAP where it'll snap around there a lot. So you use them support and resistance. You use them to come up with, or for targets too, right? So like, remember I said I was long wheat, and if it kept going, I was going to try to hold it to lug. Like that was my target for the last one. I had a volume event and I stopped out of it, but that's where I was ultimately trying to go. And these things are ridiculous. Like there's so many times I can just go watch this. Let's see. Let's see what's been going on in ES. Nothing there lately. I do want to show you some examples of how you use them as a thesis too. I know NASDAQ bounced off it a couple times yesterday. Yeah. So these weren't huge moves, but you can see this thing was struggling with the red. I hate this going to this computer. I can't control the mouse. Here, hold on. I know this thing bounced off here a few times. All right. So these are not small moves off a lug at the time, right? This lug at the time was 48.50, bounced off. This is like an 80-point move, guys, right? So bounced off again, bounced off again. Now this is where it gets important, right? When it breaks through lugs, or when it forms new lugs, you can come up with a thesis based on that. This one was a little more choppy around the yellow lug, but the great thesis that I was saying to in my room yesterday, this is a perfect example of coming up with thesis, right? So when the market makes new lugs, it should hold. Let's go back to this first one, right? Or builds new lugs, whatever parameter she has for the lugs. Like I say, the trading gods have spoken to her. Whatever input she's used for these things, she's literally is divine. These things are divine. They really are. Straight from God's mouth, the trading God's mouth. Anyway, when you break new lugs, obviously the conditions are met to make new lugs. That's powerful in its own right? So when you build new lugs, if this market is a continue, you're automatically thinking, okay, this is bullish because it busted through. That finally busted after bouncing. This is crude, same look. Finally busted through. You expect that's a bullish scenario. You expect that. Well, what should happen? It needs to hold directional yellow. That's like the midpoint, kind of like the VWAP, and prior red. If it cannot do that, and this is exactly what it does around the lug, but then it moved below here. When it can't hold prior red, directional yellow, you expect blue. Look at that, it blew. Then what happened down here? Built new lugs. What should it do if it's going to remain bearish? It should hold prior blue, directional yellow. Couldn't do that. What do you expect? Blue or red. There you go, right to the red. What did it do here? Built new lugs. What should it do? It should hold. I mean, we're talking, these are areas. This is not like exact prices. Yeah, when it comes up to them, you can act like they're exact prices. But I'm just saying this area, right? So bounce, never really got below there, got above. What do you expect? Red. And they're ridiculous, right? For thesis. So if your long-term thesis, like we go over my stuff every day, like what I'm seeing in the markets. So if I'm long, if I got a bullish thesis, and by the way, look where this is why you guys want these zones. I'm telling you, you can draw them yourself. 4 important areas of charting, or you can get mine. But it's not rocket science. It's where prior things happen. But they're ridiculous. Look at this market stopped right, damn, smack in that zone. Anyway, if I get like a bearish thesis and then I get a bearish thesis with my lugs, and then you throw a bearish thesis on what's going on with market profile composite, we haven't really talked about that today. Now you got yourself an incredible edge, right? And then you throw in the most important edge of them all, the SI volume event. You get a bearish event, it's go time, it's A+ trade, you trade bigger, right? So that's the lugs in a nutshell. All right, I'm approaching time here, about 4 or 5 minutes. You guys got questions, throw them in. Stage 5 are cheap, and but then they answer email in 20 minutes based on my experience. Yeah, well, sometimes 20 minutes is way too long. Email, I'm talking if you call in, you're having a problem, like you have a trade on and your stuff's frozen, 20 minutes is not going to cut it. But yeah, email, that's pretty quick, I guess, for email, but you want to be able to get a hold of the trade desk. They haven't been, I mean, they're not bad. I'm just saying it's like, I'm not going to get into it, but I still use them, so there you go. That's all you need to know. All right, no questions. You guys just have learned it all in one webinar. That's awesome. All right, let's look at the pain now. Let's see what I missed in natural gas. There were setups galore after this number, so that was the number. I decided not to even. This is the trade right here. Like, this is a double whammy. This is one of my 6 setups in my. I don't know if I've shown this today. Giving myself a plug. Oh, I can. Double whammy. Right? Does this click on something? Oh yeah, because I'm on my admin. So this is what it would look like. You click on it and then plays the video, and then you get the PowerPoint and all that stuff. Anyway, inherently, this is a bullish setup. Why? Because just use your common sense. It's a puke. Dumb money puke, retail trader puke. I call them dumb money because I'm a retail trader too, right? Nowadays, we're not as informed, meaning we can't push the market. The only reason they're informed is because they run the show with their orders, right? That's how they're informed. Yeah, they sometimes get information, but when I say smart money, it's because they make themselves smart because they're so big and they just run the market. Anyway, this is inherently a bullish setup. Why? Dumb money puke into the waiting hands of buy ice. This is definitely a trade that I missed. I think it was an Izzy zone too, which makes it even more sad. So that's inherently bullish as it is. And you can see what happened there. Oh, did that just rip? Oh, right off the page. All right, let's see if that was an Izzy trade so I can cry. It was probably a slug too. Hey, what? Wow, can you believe it? I can't believe that was in my inflection zone and I missed the trade. So see what I'm talking about, guys? Being one guy on these webinars, like it's so, I can't tell you how many trades I've missed. And that's another thing for the stats. It's like, how many winning trades have I missed that could be part of those stats? It's mind-boggling. So that's all I gotta say about that. Anyway, that is the best Izzy that you can have, and look at that move out of there. I don't know if you like 300 tick moves. Those are your thing. Let's see what it did on. Let's end this webinar in complain mode, shall we? Let's see. Let's go ahead and take a peek. Thank God it at least didn't get down to the lug. That would have made me very, 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 very sad. Oh, actually, let's see. You got to refresh. On Sarah Chart, you got to refresh these a lot. She has them for other platforms, Ninja Trader and stuff like that. But there's your new lug. So what do you expect here, thesis-wise? What would you expect? I would normally wait for answer or put you guys on the spot. But if it breaks the new lugs, it should hold. If you think it's going to go to red, it should hold directional yellow prior red. And you see it's bounced off there a couple times. Then you expect that. For some reason this gets back below the red, then you expect blue. That's just coming up with a thesis. Doesn't mean you just throw on trades in that direction. I don't. But if it does, say, longer term, we're in an Izzy zone, I think we are, and then it breaks, and I get a volume set up, I'll trade that bigger because the lug thesis matches my longer term thesis. Anyway, that was a whopper right there. I can just end on that complaining. Then there was a lot more stuff up here too. Then you had this looks like a broken ice setup. This was. It's so disturbing. I'm not going to draw the zones physically right now, but you can see it right here. Let's see if it retested the zone. The only thing that's the saving grace if it didn't retest, because I don't think I would have been in this one aggressively. But if it came back to 27, basically 27.99, it was a retest. Let's see. Hey, what do you know? Well, have you seen this pattern, guys? What's this, 6 or 7? It's unbelievable. It's just I can't put another word on it. You guys will have that course here this weekend. I would highly recommend viewing it. So I would have been long that, and I could have added to my Izzy trade. What else did I miss? Oh yeah, there you go. See, I knew I didn't want to look at this. Hey, what's this? Was this a? Oh, I thought that was another volume event retest failure. This just hurts. And then what would you have done here? See this? Then, so I'm long, say I was long the Bark and the Izzy trade, or the Izzy trade off of that Dumb and Dumber. Then you get your setup, trail your stop all the way up here, and then you get out there. It may have gone back above here, but that's how I get out. So I would have gotten out right around 28.40. Where would I have gotten in? This one hurts. I'm not going to lie to you. That's only 100 ticks. It's still 100 ticks. It's a lot. Yeah, see, now it's doing nothing. So there you go. I'm going to end on a bad note for me. That hurts. I just didn't have time to get over there. It's just I'm one man. Right? Oh, and the other thing too is we're building. If you end up when you get the ATR reversion trade, I'm working with a developer in the room. We may have a zone drawing tool or automatically draws a zone out of the event, so you don't have to spend half your life drawing zones like I do. That would be incredible. I would literally kiss that programmer if he could figure that stuff out, but that's in the works too. But anyway, in the meantime, like I said, you can get the spreadsheet, you get it as part of my room and the zones and the charts. If you can't get in my room, go to that other website, Pulcinitrader.org. Description is, guys, I'm telling you, this stuff's pretty cheap for what it offers you. The zones are $24, and I think, like, if I could, I literally would charge like $5,000 for this thing. That's how important I think it is. You get it for $49. All right, I am out. No questions. And not easy focus speaking, showing stuff. Thanks, Kite, for feeling my pain. You're welcome, Michael. All right, I will see you guys. I do this twice a day, every day in my trade room, most days. You can see this. You can hear my voice nonstop in there if you want to come in there and you'll learn this stuff. Get the course, learn what you're doing. You can learn in my room too. You don't need any of the courses because I show it every day, but it's going to take you longer to learn. If you want to fast track the stuff, get the courses. All right, I will see you guys next Thursday.